Market turmoil is an absolute mess right now. Volatility is hitting record highs. Let's create an explanation for our clients. Let's jump in and get at it right now.
This is The Rare Advisor, proud to be a part of the Advisor Advancement Network and home of a business model supercharged by recurring and repeatable events. Your host is Mike Walters, CEO of USA Financial. He is an investment advisor representative of, and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor.
Hey, welcome back to The Rare Advisor. And many customers, many investors, and many financial advisors for that matter are taken aback by the volatility that's taking place lately in the market. And there are just so many factors. Honestly, there are probably more pressing factors today than I've seen since the financial crisis. And in many ways, although not as bad, there might actually be more factors going on. I actually have kind of a chart that I've created here with all of this, and I don't often do a screen share during these discussions, but I will today just to kind of allow for an easier attempt at following along. So let's go to that right now. So here we are at the center of the document with the stock market strength and the volatility hitting record highs. By the way, if you weren't aware of that, the VIX just recently hit an all-time record high. So in the center of the page, between the two lines, the guardrails, if you will, are the main items of interest, and then kind of some secondary items, because there's so much spillover across a lot of these topics. They all kind of intertwine together. It's like a big puzzle, right? But we know right now that a lot of our issues started down here with the pandemic, the lockdowns, all of the supply chain issues. While the lockdowns are loosening up, the supply chain issues continue to put pressure on the economy and therefore on the market. We've had the Fed at all-time lows with the interest rates, which has been great for getting access to funding, whether it's for mortgages or various other lines of credit and so on. But it takes all of the bullets out of the weapon, so to speak, for the Fed to help counteract against other things going on. So as we ramped interest rates down for so many years and then took that final leap towards zero during the pandemic, now needing to creep that back up. So although I have the pandemic, lockdowns, and supply chain issues illustrated below in red, here I've got the Fed raising interest rates in yellow. Although it's tough on the market when that happens, I also think in the long term, it's something that needs to be done, and the market has somewhat digested that as well. So I've got that more as a yellow scenario there. Now, during all of this, we've had an absolute boom in residential real estate. And that has driven a lot of activity, obviously spawned out of the pandemic. But the flip side of that is also true, and that is that we have a commercial real estate vacancy problem where all of the workers are going remote. People are 75% of companies in the latest poll that I saw have said they're never going back to full on-site employment the way they had historically. They're always going to have a hybrid approach. I think it was only like 11 or 12%, maybe 15%, something in that range of companies that said they're going fully back to on-site. So it's become a minority issue. Now, also a minority issue are those that are 100% remote all the time. The hybrid is the place that most companies are living, and many are offloading a lot of their properties, or they're simply not renewing these upcoming leases. So we're talking about white collar commercial real estate here. Warehousing and things like that, that's booming right along with the residential stuff. And then obviously taking great issue in the news, and many hearts are with the Ukrainians as they are battling against the atrocities from Russian attack and war. That puts a strain on energy prices, all the commodity type stuff that we've talked about in previous conversations. And then that's been fueling inflation rate hitting its now 40-year high. So all of these things, although they're all of these things, although they're independent of each other, they're also highly integrated within each other. So on the side panels, we have declining unemployment rates. So that's going well. We're seeing unemployment dropping back down. My pen is not functioning the way I'd like it to. And then we have consumer sentiment, however, is near its 11-year low. So that's kind of the opposite side of the declining unemployment rate. And then we have building permits that are near a 16-year high, and that's kind of coming off that residential boom. We've got a lot of activity going on over here, which helps to increase the activity down over in the lower right-hand corner here as well with building permits. And then finally, up at the top, we have our top left, I should say, the trade deficit is remaining at near record levels. That simply means we're exporting way more than we're importing. Excuse me, reverse that. We're importing way more than we're exporting, and it makes us very dependent on the rest of the globe, which comes into issue when you are having supply chain problems and you're having Russian attacks and atrocities against the Ukrainians. And then we have finally here in the middle, we have the GDP annual growth rate is above the pre-pandemic levels, meaning that taking the pandemic out of the equation, GDP annual growth rate is back on track, and it is above where it was prior to the pandemic. And then finally, however, which is starting to gain a little more attention now in getting us out of the pandemic and all of the corporate assistance and government assistance that took place during the pandemic, that has to come from somewhere, and that has ramped up federal debt. Federal debt is running at 137% of GDP. I believe it's fair to say that's probably the highest either it's ever been or since maybe a wartime event way back in history. So there's a lot going on. There are a lot of things pulling at the economy and the stock market. It's created just an absolute ton of volatility, with the VIX being the main measurement of that. And that's why we see so many things happening in the market today. Will we plow through? Can we get back to a bull market? Yet to be seen. But there are definitely volatility issues between bull and bear. They are battling large right now.
This information is for licensed financial professionals only and is not intended for use in soliciting sales from the public. The views expressed represent the opinions of the presenter or their featured guest, not necessarily those of USA Financial or its affiliated subsidiaries. Industry references are generic and not intended to represent actions or beliefs of any individual or entity. Content is only presented to illustrate general principles, beliefs, or ideas and should not be construed as legal or regulatory advice. Trademark and copyright protected. USA Financial and Affiliates.